Hey guys, good afternoon. This is Prince, 8th of May 2015. It's 26 minutes prior to the US main market open. How's everyone doing today? Well, before I go into the crude oil daily or weekly, whatever you can consider, before I go into crude oil trading strategies, I just want to talk a little bit about dollar index and relation with commodities such as oil. Alright? You see, I've loaded weekly chart on oil and I've got loaded a weekly chart on dollar index. Fundamentally speaking, there were a lot of news that crude oil is going down because there's a lot of shale oil and productions from here and there and blah blah blah. All that BS. But there's something additional you need to know. Whenever the dollar index goes up and dollar gains strength, all the commodities and other currencies go down. I'm not making this up from myself. Just for an example, I've got this charts in front of you. It's a weekly chart, so definitely it says something. Another thing just you need to understand is, look, we have a reversal. This is a weekly chart on oil. We have a reversal pattern and we are below the we have a reversal pattern here, W pattern, and we're above the moving average. And dollar is showing the same thing, but I know, let me see what kind of simple moving average. Okay, that's cool. Sounds reasonable. So the dollar index is now trying to close. It's also showing an M pattern. So this definitely means that we are, correlated with oil. I don't like using dollar index all the time for making my trading decisions, but just this is good to have it. It's good to have a dollar index chart loaded on the side. So how's the day gonna be like? If the dollar index or dollar chart or the price action on the dollar is sideways, then the markets are gonna be sideways as well. Sometimes the dollar index doesn't work, but seems to me sometimes it does. But it doesn't matter as long as you're sticking with a good trading strategy. You can exclude the dollar. But like I'm saying, it's good to look at the dollar. Alright? So that's it. Let's get our crude oil trading strategy started. Crude oil chart, weekly chart. 1, 2, 3, 4, 5, 6, 7. For the past 7 weeks, we've been bullish. No more new lower lows. We've got higher highs. Every week there's a new high. 1. This week wasn't there. 2, 3, 4, 5, 6. So this week is closing up bullish as well. We are above the 20 moving average. Long-term crude oil CFD traders, here's how you would enter. You would enter one buy now. This is a pullback at the previous week's high. See that? This is your one buy. Okay, and second buy would be either you take these lows. You have two options. First buy, second buy at the lows of the last 2 weeks. Third is at the low of the week before here, or at this moving average. Okay. These are your 3 buys. 1, 2, and 3. Another could be you take one now, or you can skip the one right now. Take at these lows, or another one, second buy. You take a pullback. The market will pull back at this moving average. Then, boom, it should go back up. Okay. This is one way to do it. Alright. Third option, you put a buy stop above this week's high. 1. And your target would be around this candle, which is around 69.56. It's a good return, about more than 900 pips. This is based on the weekly chart. Let's look at the daily chart. I'm definitely sure nobody wants to trade a weekly chart. Let's go to the daily chart, but it's good to have it for reference, okay, that what's going on over on sentiment. Alright, so let's see the daily chart. Our strategy, above the moving average. The moving average is now at 58, so 59, 60, 61, 62, 63, we're gonna buy this. But below this 57, we're gonna short sell. 56, 55, 54, 53. Okay, that's one way to take it. Another way could be that you could, whenever the candle closes above the moving average, okay, let's say this is our moving average, you can take a buy, and your stop loss could be behind the recent swing low according to the daily chart, not the recent swing low of short term, your recent swing low would be this one here, this candle. So below this you would place your stop loss. Okay, here it's 340 pips, and you'll go up. Not good risk to reward ratio, but that's one way to take it. Okay. Second is, if the daily candle closes below the 20 moving average, okay, you would short sell and put your, let's say there's an invisible imaginary new daily candle that has closed down, okay, we'll take a short sell and put a sell stop above the previous day's candle's high. That's one way to short sell with a stop loss. And like I told you, the strategy is simple. With no stop loss trading, you're gonna be you'll be using 0.25% risk per 100 pips, no stop loss. Keep buying 58, 59, 60, 61, 62. You know, keep doing that, and if it closes below it, then you keep short selling. Yeah, and the trades are gonna work out. All right. If you're looking for a short-term trading, let's see what does short-term trading say. This is our 4-hour chart. Yesterday, this was the short sell entry. Stop loss would be here. Okay, still not triggered, but it did go. The stop loss is 154 point, and it did go about 132 points, which was really good, you know. And I suggest take 100 pips, guys. So, but yeah, it didn't go 1-to-1 ratio or 1-to-2. It didn't continue trending. But hey, we don't know. But I told you guys, skip this short sell, because we've got plenty of support coming from beginning of this week and the last week's ending. This area, can you see it? This area. So you see, we had support coming here, so we bounced back. Now you need to understand one thing. If we are failing to close above this moving average, you can really short sell at this moving average on a 4-hour chart. Put your stop loss here again. This would give you a better, if it's continuing trending towards the downside, you can your target here is 192 pips approximately, and your stop would be like 99. It's good risk to reward ratio. This is how you should trade. This is based on 4-hour trading. But let's go for those who have itchy fingers. The last opinion of mine is for those who have itchy fingers who want to really short sell. Hey guys, if you really want to short sell in a hurry, this is one of the ideas. You short sell here. Second would be, put your sell stops below this box. 58.30, 58.25 or 20 would be your sell stop. Okay, you put your sell stop on this line. If it works out, continues trending towards it's good, you know. And another, if you want to take another entry, you could place your sell stop below this low and a sell stop below this low to continue. Again, I don't recommend it. A lot of support coming here. Let me show you how. So you see some imagination here. See, a lot of support. Good support area. So I don't. Yeah, but yeah, if the market, all candles are bearish, 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 then this trade, these short selling should work out. Alright, I hope the video helps. If you have any questions, leave a comment on the YouTube video in the box below. Send me a Skype message. You can even contact me by WhatsApp. And if you still don't have a trading account, a live or demo trading account, there's a link below. Go to the AvaTrade website and you can open a demo trade and start beginning from now and ask me questions. Alright, so this is Prince. Let's have a great weekend and let's have a great trading day. Bye bye.